Hey guys, Joe here from JCS-Charting. A quick look at the gamma exposure and the open interest because we had quite large changes there last week. We had a massive inflow of premium calls for the June contract. So the open interest for that 6,000 strike level increased dramatically. And that might be driven by hedges because there were quite large put options placed for 5,500 and 5,250. That's the red bar to rebalance the dealers' portfolios. The gamma exposure is being very high at that 6,000 strike level for the last 4 weeks. So the market makers are actually deeply in green. They still have high readings at 5,500, but I believe we're gonna surge into the next Astro turning date, which is due by next weekend. I tell you what's happening, let's hop. Into it. Okay, we're gonna look at the daily chart here of the S&P 500. It's a cash indication. All these projections have been here for quite a while in the chart. As you see here, that pullback was expected much deeper. I wanted to see that gamma level at 5,500, which didn't come. So that back test of that low here at 5,433 didn't come. However, time actually matched quite well for the 7th of May, which was a minor Astro turning date. But then, markets turned around. We realized that just on time, and we got rid of most our short positions, and we switched again on to the call side. We triggered that level here at 5,500 a while ago, and that means we should see a second min target of 5,754. That level should be watched very carefully here next week. If that breaks up, I believe we're gonna see a surge into the 5,911, which is a bonus target, and it's also a gap close at 5,842, and there's already a magnet on at 5,880. So there could be a massive squeeze next week into the next Astro turning date, which is next weekend, before we see a minor pullback at the S&P 500. And a quick look at the weekly. We talked about that rising channel here a couple of weeks ago. We had that Popgun of that channel, which popped to the downside, and we made 100% duplication of that channel length to the downside, which matched the all-time high out of 2022 before the S&P turned around. And then we made the pullback of that Popgun here, which made like 1, 2, 3 duplications to the downside. It pulled back to the trigger, which was at 5,559. And now we had a new one, which we talked about, I think 2 or 3 weeks ago, about that Popgun, and it obviously popped to the upside. We retested that lower part of that channel once and another time last week. The 100% target for that Popgun, so another duplication now to the upside of that PG, is at 5,970. So this is very close to the gamma at 6,000. That's high strike level. And once we reach that, there is the possibility that we go all the way back to that trigger at 5,534. And remember, there were also high gamma readings at that level. We switch to the NASDAQ 100, and what you see here is a smart money flow of the NASDAQ 100, and that is what you see here at the bottom. There was a massive increase of smart money once we made that low of April 7th, and then it surged much higher. That means really big guys were buying these lows. Once I talked about it, no one wanted to believe me, really. We made a secondary low, but smart monies just stayed up there and kept on buying. There is a very slight divergence here at the top. But smart money is not really pulling out anything. They just keep their positions. So we have the same as at the S&P 500. So be aware that this can squeeze much, much higher once big guys are participating in this rally. What you're looking at now is the upside downside volume index on a daily basis for the NASDAQ 100. By the way, it all looks the same for the S&P 500 and the Dow Jones and even the German DAX. Here's that low of April 7th, and you see the downside volume dramatically increased. It was still, even after we made that low, much higher than the upside volume. That is that blue line. And then it switched on April 23rd. By the way, on DAX, it switched on mid-April already, so a week prior. And DAX is actually leading, in my understanding, if we compare that to the US markets. And since then, upside volume was much, much stronger. I mean, here was even a little decline, but then it started surging again. So that upside volume, as long as it stays above the downside volume, the rally should continue into new highs. And another daily chart of the NASDAQ 100, it's a cash indication, and as you see here, the projection worked out very nicely. We were focusing on that make or break it zone at 19,162. Once it broke, we said we are strongly on the bullish side for these min targets. We hit 2162 last week. We already hit it the previous week. And I was initially going for a back test of that MOB, but that got missed out. Timing was right. We didn't even close that gap. And I told my members, as long as that gap here at 19,571 stays open, we have to assume, or we have to expect, higher price levels for the NASDAQ. And there's one open target still at 2780 and an open gap at 2628. I haven't done my homework for further up targets, and they might be even hit the following week. And a quick look at the weekly NASDAQ chart. Same Popgun here as at the S&P 500. It obviously popped to the upside. We got now two confirmation candles on the weekly basis closing above that trigger 19447. And the initial target here is at 21,294 for that weekly Popgun. And be aware, once we hit that, a pullback is usually due, which means that trigger level should be hit again, 19447. A quick look at Tesla daily chart. That 5-wave count we talked about, that one, and then we had a 2, and then we had a very long wave 3, which ended up here. Wave 4 and wave 5 just made a slightly lower low, and then we started our recovery and we bought that here at that 230 level, and I said watch 272. That got rejected initially for a very deep pullback, and then it got triggered with that candle we were hitting. And here you see how accurate these fib levels actually work. We got rejected at the 294 twice, and then almost on the dot we hit the last target on Friday. 312 is now my magnet for Tesla, and we are about to break that trend line here to the upside. So keep in mind that the red zone here is a resistance zone, but once it breaks up and once we make a weekly or a daily close above 312, these are our next targets, 338 to 349 for Tesla. That's what I'm also going for. And here we got Nvidia on the daily basis. We had such a nice bullish Wilbur wave wedge which broke to the upside. It worked very nicely to the downside with our red sequence. We bought at $91 and then we surged to the upside. This year that secondary low was right in the middle of our suggested cycle, and then we went all the way up, and now 117 was called out for my first target. We need a daily close above that to trigger that green sequence to hit 126 to 129 or even higher. I would like to see the target line to be hit as a minimum. 136 is my initial bonus target, but I prefer 152 for Nvidia. A quick look on gold. That's an hourly chart here. I posted this chart here somewhere here. I haven't touched anything of that projection. That black projection is my original idea. The red one is alternative. We were going for the min target zone here between 23267 all the way up to 3280. We hit that, and you see how time and price matches that sequence before we were going for higher levels. 3364 is my initial target, and this is a make or break it zone for gold to run in that green sequence. I would like to see these min targets of 3,400 to be hit in accordance with that target line of that nice bullish Elliott Wave wedge. And last but not least, we talk about the DAX. You see in 4-hour time frame, the Xetra, the cash indication, and I must say I was wrong on this one. I was forced to hedge at the middle of last week. We got out there by Friday on break even, so we are out of all shorts again, and we are still holding our long-term long positions. I was cashing in a few of them last week. I had 3 major positions. I closed 2 of them near the all-time high. They are still from 19,415. So somewhere here we're still holding 1 major long positions. We also opened a few temporary ones at the 23,430 level. I assume we're gonna hit 23,665 next week as our second min target, and the 100% target of that cup and handle position waits at 24,11, just beneath that bonus target of 24,537. By the way, all these targets, they match our long-term Elliott Wave count I showed to my members 4 weeks ago when we were right at that low. And we jump into my Discord. This is a weekly thread of the DAX. By the way, if you want to have this kind of information on a daily basis, I recommend you to join my website at www.jcs-charting.com. You find there 2 packages you can subscribe to, a basic and an advanced. The advanced got a bit more features like a chat room. You see there my setups. You see here right now short-term trading, intermediate trades. I have to mention I'm a swing trader, so the intermediate trades are the ones to look for. I also do Astro updates. I also do stocks on request. We had a few now the last week. Nvidia, Tesla, Coinbase was quite interesting. Porsche and Evolution Gaming, that was asked by a few members. I also write things about Gamma, open interest and volume reports. This is for advanced only. There's also a chapter on trading psychology. Volatility I explain, and a few of them are not published yet. So let's come back into the weekly thread. This was here the update from the 14th of April. So I gave my members the opportunity that we are actually in a bullish phase, and that decline we experienced with that low on April 7th was nothing more than a corrective wave 4, which was very sharp, but it is part of the total count. Once I open that, this is wave 5 of wave 5, obviously. That wave 5 of wave 5 started on March 2020. And that wave 5 now begun on April 7th. And yeah, we're on the last stage, I believe, of a 26-year cycle, which is important to understand. And usually these large cycles, they end up in a blow-off top. Most traders haven't really seen. I haven't seen one either. The last one I saw, but I wasn't participating during that time, was in 2000, that dot-com bubble, which bursted to incredible highs. And we are going to see something similar, in my point of view, by the end of this year. And this is basically my long-term outlook. And this applies to all different kinds of assets, Bitcoin, so all various of cryptos, metals, all indexes where stocks are involved. So all US markets should follow that projection. So that's about it. Basically the same outlook for all indexes. I assume a rally into the end of next week, into our next Astro turning date. And if you liked my outlook here, you're welcome to join either my Discord or to leave me a nice comment or a thumb up on this video. I wish you a happy weekend and a happy trading week for the following week. Bye bye and all the best.